Boom, we are alive, ladies and gentlemen. Thanks for joining us again. Another wonderful day. Beautiful liquidity check yesterday. It formed some really unique aspects of the trading ranges that we're in for a few of the assets that we've been following. And it actually makes the perfect example of a kind of a lesson to go over today. Seeming there's an endless amount of lessons in life, might as well start to enjoy accomplishing each of them and graduating from the different belts that you could get. Where did I want to start today? Let's actually start with Avalanche. Is what I'm talking about. I think will become clearer if we look at Bitcoin later on in the sequence of events. Okay, so this is Avalanche on the daily. If you can, give us a thumbs up. Let us know that the stream is going smoothly as well at this point. Or it appears that maybe... I have actually some technical difficulties I did not double check on, which is on BTC share. Excuse me, ladies and gentlemen. We have to do a little bit of a live editing process because the screen share appears to be stuck. Traveling. Okay. Change it again, and then it should be yeah, there we go. Thanks for bearing with me for a moment. This is our redrawn Avalanche chart. I'd like to give a shout out to Bear Den Jerry in the private group for recognizing this one a bit earlier than I did. Let's go over first off the process of the awesome entry we had right around here between the $17 and $21 area. Beautiful trading range that took place right here. Executed that not flawlessly, but still came out ahead. Here, this is where I started to make my first mistakes, is I thought that this was a very bullish trading range. We talked about this a few times, the potential for schematic 3 in this area. Turn into part of a distribution, but then turn into this much bigger reaccumulation pattern again, which is what Bear Den Jerry pointed out, with what appears to be a pretty nice inverse head and shoulders taking place for Avalanche at the moment. Okay, so why do I want to go over this today? Something happened yesterday that I've seen happen a few times before, and these start to become indicators. So I'm going to actually draw my brush here a little bit bigger. But this supply check that took place yesterday, we've actually seen this happen once or twice. We've shared it throughout the videos before. But I'm just going to quickly explain something by sharing a different view of this. So this is reaccumulation schematic 4. So I was a little bit early, again, thinking that the top of the reaccumulation here was actually a schematic 3. And I've talked about how this can happen, that you can end up mistaking a shorter time framed distribution that's really just part of a larger time framed reaccumulation, which is why you always kind of want to zoom out and look at the larger picture. And with Avalanche, Fetch, Solana, Link, all of these assets to begin with, we are in a multi 500-day accumulation period, which has then led into these reaccumulations so that we can, at least in the larger time frames, be assured of the reaccumulation. The smaller time frames we can use just basically to look for the best entry points, again, based off this larger horizontal structure that's taking place. So this Bear Den Jerry again noted that it was a reaccumulation schematic 4 likely that was taking place, slightly different than the one we've got drawn up in our ideal world here. And we've just started and finished the jump across the creek and the test. Now, I indicated the jump across the creek by the supply signatures here for the private den. That email will come out today. And this one here for the start of the SOS. So we just actually saw this take place in Fetch on a larger time frame. So this is the 2-hour time frame on Avalanche. And we are going to look at Fetch on the, this is the 6-hour. So I wanted to point out this earlier part. We were making videos about why we thought entering Fetch right here was a very smart idea. We're currently 340% up from that entry point. If you were lucky enough to jump in and take that for the whole ride, again, this is why kind of aiming at assets and accumulation is a good way to go. If using leverage can function really well at the exact right time, but getting it right also can mean you miss out on just entering and doing nothing. Again, 340% for Fetch is pretty amazing. So you can do that with like a 3x, essentially, and all you have to do is get a 90% gain. So leverage helps in certain areas, but also can hinder because here's just a fantastically powerful position. But again, what I wanted to go over, aside from I guess these two different styles of investing or trading techniques, was this reaccumulation after decline. So again, this is a variation that I'll point out. This is on a much larger time frame that we went over with Avalanche, but here you have 230 days of accumulation, the first reaccumulation, the breakout, the SOS and LPS, the final breakout, and then the start of distribution into a reaccumulation after decline, which is the secondary bottom portion that turned into a reaccumulation after this current distribution pattern took place, after a long-term accumulation. So these are 2-3 steps. Now we're in the 4th and 5th steps, which is kind of similar to Elliott wave in this function. If you're into that kind of stuff, I focus on the trading ranges a bit more heavily. It just seems to work better in the long term because it could get confusing if you're counting waves because they're also scale invariant. But nonetheless, we broke out SOS, back up, LPS into a bigger SOS and LPS in a breakout phase. So we are almost into new all-time highs, if not into new all-time highs for fetch here. So just for fun, we are into clearly new all-time highs for fetch in the last 24 to 48 hours. So this reaccumulation after decline had a few series of events that happened. Reaccumulation, the breakout, the SOS is kind of choppy until you get a big SOS, final LPS, and a breakout phase. I think that's what's about to happen for Avalanche as well. So let's give a bit of a larger time frame on the 6 hour so I can show where I think we're going to end up with this style of reaccumulation. So I believe that what we're going to see is this kind of choppy SOS first phases into a big SOS once we break out past the buying climax around $50 here, and then upwards of 80 to 120 in the finalization of this kind of SOS LPS phase that will take place for Avalanche here. So what's fun about this even smaller time frame, let's focus on this part for a second. It was the jump across the creek. So there are certain moments when you can spend the least amount of time in a trade before breakout occurs. And I'm going to go back. The 2 hour seems to be the prettiest view of all of the individual pieces. Yeah, there we go. So I want you to focus on this white line. So I have this white line here. This is known of a jump across the creek. You can see it highlighted on our drawing here very subtly. And notice that the top 3 or 4 blue points are actually the resistance of that slope. So here's the resistance of that slope until you finally jump across it and retest it. So here you usually have a jump across, and the only thing that's drawn probably a little bit improperly here is that the retest of the creek almost always comes down to and totally touches the creek itself. Now, you can find that in multiple ways. I'm going to turn the VPVR on, which is the volume profiler. This is part of the more advanced version of TradingView. But what that's going to do here for us, I should actually make sure the stream's going well. Yes. Okay. So, once we kind of backtest there, why is the VPVR not showing up? Turn it off. Turn it on. Strange. Is it showing up? Oh, it's saying I've got a really low connection speed on both the stream. Yeah, we'll be back in Costa Rica with a blazing fast internet here shortly, I guess. There we go. It's finally showed up here. So this long red line in the middle of the VPVR is generally where the point of it's called the point of control within the trading range. So we want to focus only on this trading range, which means we have to show pretty much from the primary support to the jump across the creek here. And see, this red line is just moved. The internet is so slow right now. I apologize. This red line is now moved to the middle of the trading range. Effectively, what you'd like to do is purchase anything you can below the middle of the trading range. That's the best place to accumulate. Once we jump across that and retest that range, as you can see here, we jumped across the creek, retested the creek. Bang, bang. This is very important. And we actually retested it again yesterday. This is probably the least risky, least patient place to enter a new trade if you want to. So for instance, if we look at fetch again here, and just do a few time frame sweeps. Number one, we had a falling wedge reaccumulation pattern, which was taking place with the horizontal range here. Some of the stopping action and the volume signatures itself were kind of proof and evidence of this, but nonetheless, falling wedge through the range. And once we started to jump across the creek, which I will draw here, here's where you have the top line. I don't know why it's not drawing here. Top line of resistance follows down. It actually follows down pretty much perfectly for where the falling wedge is. It goes just below that, jumps across, and tries to retest. Now again, it doesn't always retest, but having buy orders in this area, this is the position of the trade right after the jump across the creek again, which I have labeled here, that is so powerful. So with Solana, we see something very similar. Solana, the buying climax, click down through the up thrust. The creek actually starts to come down right here. You have your first kind of jump across the creek, couldn't break it, and then above, and then a retest, almost bring you all the way back down to the VPVR and the start of the SOS, which is in progress now. So I believe Avalanche is just a step earlier than that, so we've still got some supply range to break through here, but fundamentally, this is the least risky, most prudent point to be in a position, because you can get rid of the chop, you can get rid of the lack of patience, or rather you can spend that time not being impatient, but actually building a schematic of the trading range of the trade that you want to enter, so that you can have the most confidence possible to build a big position potentially in that short time frame and hold it for the next incoming boom. And that's what this stuff really seems to help with. So here again with Solana, the comparison with Avalanche, you notice particular structures in the volume profile and the volume and supply signatures themselves. Here we have the first indication of what could be an SOS. Now, the downside here is that this moment, when we break into the SOS, could turn into an upthrust and then distribution, which is a very bearish signal. So knowing when those are coming is super important, because these reaccumulations can look like perfect setups sometimes until the very last part of phases D and E, when you get very strong indications. Now, yesterday, the way Avalanche retested the creek, Solana retested the creek, Bitcoin came down and everything else kind of tested the creek at that moment. There was a fair amount of volatility there. That was actually a very positive signal that there was no more supply left. You had hundreds of millions of dollars in longs that were wiped out in Bitcoin. This likely shocked the market and tested the creek perfectly at that moment, again, to run up the rest of the altcoin sector. So I suspect that what we're going to see for Solana here is some type of continuation of the SOS, maybe a backup phase that brings us again all the way down to the top of or pretty close to the top of the VPVR around 121, or it would also be the top of our trading range as well. So with that in mind, SOS phase is taking place. You're going to get maybe one or two smaller entry points before Solana breaks up, but after that, we could be headed towards distribution, and then possibly another reaccumulation similar to what we saw with Fetch, where you see big asset prices up. We come down maybe 70% for some of these things, and then go up for one last final run in August. It's kind of what the timing is feeling like. We had a board meeting yesterday where we chatted about the narrative process of the ETF approval, and how retail is just showing up now. So retail showing up now would align them to want to then buy the rumor, buy the news, the same way that people thought the opposite would happen with Bitcoin, where you buy the rumor, oh my God, the ETF is going to approve, and then once it's approved, just sell everything because it's already priced in. Clearly it wasn't. Bitcoin's been very impressive for this move. So with that in mind, Bitcoin, this is a chart we drew up over 3-4 years ago. Jesus Christ, almost 3 to 4 years ago in 2020. Nothing has changed since. All we've done is extended these regression lines. So we had a nice rising bottom accumulation, you could call it. Very, very bullish pattern, especially within the regression line. We've had our SOS, our LPS, and our breakout phase. Now, I don't generally chart like that. It's easier to chart horizontal, but there's definitely something that took place between this regression line process as well. It obeyed it pretty systematically. So what we want to do is take a closer look. Let's go even closer for Bitcoin. We're about to zoom down to the 15-minute and try to take a view from here. Yeah. So there's a few things that are taking place. Number one, we see, again, the supply signatures that would indicate probably our primary support here and our buying climax here. So It's very, let's just kind of go over this. This is on the 15-minute again too. So we don't, just as more of an example of process than it is something to rely on here. Primary support, our buying climax all the way up here. We saw the first set of shakeout. Again, this is not just what's visible in the structure of the candles, or whether you use area, or I like using Heiken Ashi. It just helps remove. This is another great way to do it. Remove some of the emotion and focus on the structural data. Here, we want to note that our primary support is this large run-up of supply. Our buying climax is followed by the next large run-up of supply here. Our shakeout is also very, very quickly identified by an opposite move to distribution of the downside, which are these blue sales functions here. A bit more noticeable in that Heiken Ashi because the volatility is shown a bit more clearly, as wicks can be a little bit deceiving. And we've now started up into the top of the trading range and visiting the upthrust action. And we're still awaiting some type of level of spring or breakdown. So this is an important little spot, although again, based off what we've just looked at, long-term data, long-term accumulation data and breakout into the SOS and LPS phase, don't want to fade it yet, but volatility is definitely going to start to increase for many assets here because, as we just pointed out, this beautiful reaccumulation after decline for Fetch has already equaled a 300% gain into new all-time highs. I suspect that other assets will follow suit to some degree. It makes more sense than thinking there's going to be distribution now, is because we're viewing trend changes to the positive in assets that we've been following since the kind of the beginning of the bull market starting. Something like Link is another great example of this. Link is not far off. It just finished a reaccumulation pattern outside of its box with a breakout, an SOS. Here's breakout, SOS, backup, and the final LPS stages I think are about to take place. So if we compare that to what happened with Fetch, it's not as nice of a drawing. I apologize. I just quickly sketched it up this morning. We had reaccumulation after decline with our spring here, our first SOS, and our reaccumulation, which actually turns out to appears as an LPS phase to the entirety of the range. Very similar with Link here. SOS, LPS, quick breakout SOS. If we're lucky, you get one more down test here, and then I think we're going to absolutely rip for Link here. We're going to hit $26, find a little bit of resistance, and then we could be moving all the way up to $40 to $60. So there's a pretty easy 100% move here for Link, I believe, as well. But again, it's following these smaller structures, but understanding we're in a larger accumulation and breakout structure, which is why we can remain bullish, even if on the smaller 15-minute time frame, something for Bitcoin could be bearish because we don't know what's happening yet. It's better to assume the long-term movement is bullish because we just entered this, and it's taken hundreds and hundreds of days for the market makers to start this process. They're not just going to quit it tomorrow. So another beautiful look here. Ethereum is continuing down its SOS path. I suspect it will do so before we see we're likely to see an LPS phase here. Although as we zoom out a little bit further, I suspect that LPS phase is a little bit closer to the $4,000 mark, something like this, where we see the SOS finalization, LPS here, maybe. Let's just draw it like this, and we'll shoot up into new all-time highs for Ethereum as we move into August, and the potential for an Ethereum ETF. And this will be a real likely, we're close to a market top potential. I think that's probably correct. But it might not be the exact top. It could go boom up to $8,000, down to 5, 4, 3. Everyone's crazy. Oh my God, it's the last time to buy ETF. Think about what happened to Bitcoin after it did an up and a down, and then boom. Or maybe even higher, boom. But it'll be sharp spikes up and declines here once we break out past this all-time high, and that will be profit-taking time. There's pretty much anything past this. And again, you could even figure that this is a reaccumulation after decline sorry, I've just made this Ethereum chart messy as fuck. Let's draw this up as a reaccumulation after decline, which is kind of similar to what I think the S&P 500 did. So you actually had your primary support going all the way back to here. You can look at Ethereum as actually functioning within a larger trading range. All we managed to do was chart the exact bottom of the trading range with a very nice accumulation range here. But we're actually, again, in fact, part of a trading range within a trading range. It's a very, very meta. So yeah, we were probably going to shoot up here, see resistance between 34 to 48, 49 to 50, or sorry, I'm reading like it's S&P 500, 4,900 to 5,000, some choppiness, and then we're probably going to break into new all-time highs again because Fetch is in a new all-time high already, and we know that certain, like the AI narrative is just so strong. I think that these are the leading indicators because again, Fetch and Link started to move first, and I believe Link will be in new all-time highs, or at least close to its previous all-time high of $50 within the next 3 to 6 months. So fun stuff. Keep an eye on all these charts. I've got a really awesome private update coming for you guys in the private bear den, going into quite a bit more detail around all this stuff. So thanks for being patient. I'm out of my dance classes, on my way to being a world-class dancer, but out of my dance classes for today. So keep an eye on this. I'm gonna jump over and take a look at any of your guys' questions for fun, as this is a live stream. Trying to back out again. Barry says, "Hola, Iris." On the way to Costa Rica now. Great. We'll see you. Stoked to see you when you land. That'll be a ton of fun. Barry Church of Pump. Oh, you're nice. Great to see y'all in the chat there. Barry says, Robert and Tio must have had an online jam. Well, we were jamming on the phone last night. That's true. Yeah. Have you looked at USDT dominance, massive Livermore? I haven't, but that's a good idea. Tomorrow we've got a bit more data that we'll take a peek at. I kind of gave my plan to exit process there. It won't be an exactly today or like a date thing. It'll be based off certain things happening in the market, and not just in the market, but in people's emotions. Retail is not really here yet. They're kind of just showing up. So it's okay to be more patient. Maybe the days when we're doubling subscribers or something in the Arcane Bear Den, or it will also be an indication that more retail is around. All of you that have signed up for the private den are like longer term thinking investors. You know how to play the game a bit better. But all of a sudden when retail shows up, I remember there was a time last year when we had almost like 600 people sign up in a single month, and that's just unusual. So that's probably also an indicator. So we'll let you know when there's a bunch of you that sign up to the private newsletter all at once. That's probably near a market top. Hopefully we'll force people to buy like a 5-year membership. That way they are drawn out through the entire process of starting at the beginning of the bull market, entering at the end of the bull market, and having then to make it to the most profitable time, which is the next bull market. 5-year memberships only at the top of the bull market, I guess. A best way to help you guys out as well. For those of you that are still joining, we'll give you a good deal. You only have to sign up for a month or a year at a time, knowing that you're smart enough, hopefully, to stick around for the next 4 to 5 years to enjoy both up and down and then back up portions of the ride. Do you consider the 4-year cycle in TA? No, not particularly, but I look at cycles in TA. So it has not always exactly 4, but it's pretty clear that there's evidence of the universe being a giant clock. So even though it's not exactly the same when it clicks, it's pretty consistent. But not exactly. Just enough to screw everyone's minds up when they think it's exactly the same. That's usually how it works. Okay. Oh, the other thing that would be nice, everyone, we're going to start posting videos on X as well, because there's just some stuff we can't talk about. And we're also going to try to build a few other pieces for fun. But if you haven't yet, make sure you go to, I guess it's what still says twitter.com/arcanebear. No, but they call it X. And subscribe if you haven't yet. We're going to start posting all of these videos there as well. Paul D drops a $10 super chat. Awesome, Paul. I appreciate that. Oh, yeah, I forgot you guys can do that on live streams. It's quite a bit of fun. Thanks for that, Paul. You reminded me that works. Something about the number 4. Yes, exactly. So I want to Let's go back and take a look at what's happening in some of the market space outside of our little world of crypto. Again, everything looks really good, but if you want more like deeper dive data on that, just sign up for the private newsletter. Yeah, Solana's up 9% today. Let's take a look at the TradFi markets. Yeah, Cardano's even up 8% today. But let's go over, take a look at the DXY. I suspect the last things we had drawn up here were actually bearish. Yeah, I think so again, this is one of the interesting portions here. We were just looking at reaccumulation after declines. Like this, where the breakdown and then there's a reaccumulation process. But this also highlights something I thought that was very interesting. This moment here, normally we'd think spring, SOS, breakout, and then you'd move back above the box. And this is why it's so important. This is the dollar, is to be very weary of a breakdown at the top of the box. So let's say we hadn't got to this portion of the time frame and we're trying to front run the dollar in what we think is coming next. We're like, shakeout, buying climax, secondary test, up thrust, spring, SOS, and you're going, oh my God, I'm gonna get all in this position. But look how at the very last moment, this position in the DXY switched dramatically. Couldn't get back above in the SOS, break below, end up closing below what would be our frame effectively like this. So this would actually a moment to recognize for what's going to happen in the future. And the most deceiving part is it'll look like you're in a reaccumulation range into an SOS and a breakout, and then the very last moment it comes back into the trading range, can't get into the trading range, and then is usually bearish. And it means that this is a distribution, and then this ends up being redistribution. So I think that's what we're going to see here for the dollar. It could be a bit more deceiving. This could be just an upthrust, and this could be the spring. We don't have any volume signature characteristics here because the Fed is a bunch of criminals, and they don't give us data on that velocity without lying to us dramatically about whatever the CPI or how much cash there is, when we know the Pentagon is missing like $1 trillion or something plus. So we don't get real data here that we would need, which would be the volume supply signature or the velocity signatures for the US dollar. Whatever data they do give us, we know is basically a fucking lie. So Bitcoin, just to remember the importance here, but back to the dollar, I think it's looking bearish. I think we're going to see a breakdown probably in the 90, and if it's an actual breakdown, again, it could be all the way to the bottom of the range here at 90. Now, again, there is reason to believe that other currencies are going to break down first, and we could see some strength here, and maybe for the first time ever see Bitcoin and the dollar kind of thrive at the same time as a last gasp of nonsense takes place as they print us into hyperinflation, and you see the dollar and Bitcoin rise after a kind of retest of this rising pattern that we've been here for the dollar for a few decades, again, as people recognize that their currency is worse than the dollar. So that because they don't trust Bitcoin yet still, they move to the dollar over their own currency as they start to collapse. The dollar gets its last gasp into relevancy before total collapse and hyperinflation somewhere in 2030. And I think that's a very real scenario. I think one of the hardest things while trying to calculate what happens to Bitcoin is what happens when the dollar starts to totally collapse, because it should. People shouldn't trust their government anymore. They don't have their best interests in mind. People shouldn't trust regulators anymore. They shouldn't trust even academics anymore, because all of those institutions have been bought out by money. It's not worth trusting them anymore. You can't just trust the science. The science is bought and paid for. Academia, regulators, government, bought and paid for generally by supranational corporations. It might not just be like, hey, it's brought to you by this company. It could be that we're witnessing something brought to you by a deep state supranational corporation of money launderers, right? So I think once the idea that we're dealing with criminals really starts to settle in people's minds, Bitcoin's price could go to like $6 million or something, because then what is the dollar worth? And that's a really important question. I don't know if that happens today, but between here and 2030, I think that's what's going to happen. I think the dollar will probably have one last gasp. I don't think that this is it. But I think as it does, that's when Bitcoin starts to go into parabolic mode. So the Weimar Republic, Germany, is a story that many people have heard. But I just want to give a visual example of what that looked like, because I think it's important. Weimar Republic, Germany, hyperinflation, I guess, will be the more important part to type in, hyperinflation. So there'll be some Wikipedia article here that we'll look at, not important, but it just goes to show what happens as countries go off gold and then into total paper inflation. Here you see a breakout where all of a sudden it just goes parabolic into the trillions of paper marks, like, what is that, 1 billion? So let's see, where is it? There's 100 million. That would mean, okay, so this is like 1 billion paper marks. Effectively, right? Multiple orders of magnitude from 100 to 10,000, 100,000, 1 million, 100 million, 1 billion paper marks to 1 ounce of gold. So this is the likelihood, I believe, that will happen as the governments of the United States start to go into hyperinflation. What are they going to do next? They're going to have to print. I don't see how they don't just print more for, hey, we need more guns, we need more bombs, we need more weapons, we got fight bad Russia, we need to give money to Ukraine and to Israel and to bomb the Houthis. You don't know who the fuck the Houthis are, and you were going to bomb them. It's ridiculous. It's ridiculous. But the governments keep doing the same fucking thing. So don't expect, just believe them when they tell us who they are, which is criminals, okay? So let's start with that as a basis factor. The government and regulators and academia have turned into corrupt, bought-out mafia criminals. Let's just move forward with that as the basis of the thesis, okay? And it makes everything much, much easier. So that's what I believe is going to happen. You're going to see the dollar drop down maybe a little bit and then spike back up as everyone else's currencies start to go fail. Bitcoin goes into new all-time highs in pretty much, it'll go into new all-time highs in every single country. There'll be a correction of some sort. I'm not sure what that is or when that is, but between here and 2030, the US dollar, to me, is going to collapse. And there are very few things you want in your portfolio. I believe water, Bitcoin, bullions, bullets, bitches, all those things will be helpful in the future. So where was I going with this? Oh, yeah, to continue on, look at the S&P 500 because I don't believe the gasping is over. They're going to print us into new market highs. Look, everything's fine. The economy is fine. Here, I also believe what we are witnessing was a reaccumulation after decline. Too, we just kind of broke out into the final money area here for Bitcoin as well. For the S&P 500, very, very strong indicators still on the weekly, on the daily. I suspect we'll see some type of, so seeing a reset of that would be nice. I think that's also when we'll see a reset somewhere in here. Remembering there were new all-time highs. If you look at what happened with Fetch, previously shot up to an all-time high, and then in a very short period of time, distributed down 80%. So we could see the same thing for a few of these assets right now, shoot up into new all-time highs or another 100%, and then break down 60 to 70%, reaccumulate one more time, and then break up into even further all-time highs, and then end around August. So hopefully that made sense. We're going to keep showing up for live videos, sending awesome email updates to the private newsletter and private Discord members. We'll keep it at that. Maybe I'll look at one more question or two. I could just stay live streaming and laugh with y'all. I'm laughing so hard like roaring. I'm glad to hear that you appreciate my comedy. Sometimes in my mind, I think I'm pretending I'm practicing to be a comedian. So I should do more videos where I just rant about whatever stuff I find on x.com because it's pretty wild out there, ladies and gentlemen. Hope your bags are packed. It looks like we got 1 or 2 more big runs in specific spots of this ecosystem. It's going to be fun and enjoy the ride. We'll see you guys again on the next